Hello guys, welcome to Frequency in FX Trading channel. In today's video, I want to talk to you about a trade that we took on the volatility 75 index, and I was supposed to make a video about the strategy I used in trading it, but that is what we are here for, and that is why we're going to explain to you what the trade is acting upon and why the trade is moving currently in our direction. As we all know, this is the what is today's date? Today is the 14th of August. Um, Something about the day I was given birth to on the 14th. You know, there's always something happening. Trust me. Just mark that down that I said something always happens on the 14th of each month that comes in and goes by. However, I would apologize to all my viewers that I haven't been online. I've not been coming as frequently as I used to come back then. I stayed a little while longer. I apologize for that. I'm so sorry for it. So I'm gonna explain the strategy today. As you can see, this account I turned $840, $830 to $4,000. This is currently a trade I took for a client, right? This person is from South Africa. He works with me and I manage his signals for him. He watches our signal. We share with him forex trading signals and he trades with us. Um, After enrolling for our VIP channel, the VIP channel of which we post our signals to, after enrolling for it, the guy became um, one of our most anticipated clients here. We became so close to each other that we even talk phone. So he gave me the signal. No, we gave him signal, and we manage our account. We manage his account for him, and while managing, we still do some other things together, such as talking, making, um, creating topics, discussing business and talking about straight, um, straight momentum priority. Okay, so this is it for me and my clients who I work with, and has been making serious, you know, profits. And now we took this trade on his account. Um, I know some of you might be asking, but just write it on the comment section. Whatever you have to say to us, whatever you have in your mind, and that you have to say to us. You see, they already charged us swap of $32 each, $32 per trade, and another $32 for stop loss. Oh my God! That is to say, 32 minus 83 was what they charged us, right? That's good. That's good. That's good. So we're talking about the markets and its momentum, why it's moving this way. I'm quickly going to explain the strategy behind it. I want to show you guys the strategy I use in trading this particular market momentum that has been going seriously in our profits so far. Yes, that is what I'm going to be explaining today. So right now, the strategy of which we take in this trade, we started analyzing it from the monthly time frame. The monthly time frame was where we started our analysis from. We checked the momentum. We saw that a particular type of head and shoulder was forming. Of all the M's and all of the W's I spoke about, heads and shoulders pattern are the most used of all this strategy. So this is the heads and shoulders pattern, and I saw we had the same pattern I drew to you guys in a previous video, telling you what we did with it. So that was the same thing I saw here. And this pattern, when it comes down, it goes up. When it comes down, it goes up, right? But I had to sell it because before we confirmed a trade on this pattern, right? Before we confirmed a trade on this pattern, this is the monthly time frame, and this month is this August we just entered into. And when I saw that the market was going down, it acted like it was going. Now people who were not patient already started buying these assets, and guess what? They lost a lot of money for trading the wrong way. Before trading this pattern, this month ought to have been closed. You see, it went up, deceiving so many traders and telling them it is going up because of the pattern that was recently drawn by the market. The very identifiable pattern that goes upward after a formation has been created. It goes up like that. When it goes up like that, it is a upward movement, but a candlestick is required for a confirmation. That candlestick, what it basically does is that it helps you tell what will truly or what will really happen in the market. You guys see we are accumulating in more profits. We're now in a profit of $1,762, and yeah, just like you see it on the screen, per trade, actually two trades. And it wasn't a full margin trade. I had a stop loss that was never triggered, right? When I took the trade, I took it with serious targets. you know Look at another reason why I decided to take the trade on a monthly time frame. When you draw downward, you see that the market has started creating market structures. And what this market structures does is that it keeps creating itself, and it keeps meeting themselves with wicks that tells us we are already leaving the upward movement. I'll cancel this. We are already leaving upward movement. This is a market structure that was, created another market structure eating the previous market structure, and it goes down again. Another market structure was created, and that was when we had this pattern formed. And something I liked about this pattern is when the formation is generated, this is the formation, right? But sometimes the market used to generate this formation completely here, telling you that this is the pattern you saw. This one, no, not this one, sorry, I'll clean this one. It goes up and it comes down, and it acts like it's going to go up again. You need to learn about how you can use these green patterns and red ones when these M's are created. Now, after this M has been created, a weak line gives an entry reason. There's a weak line underneath these patterns that makes it look like this one. But then we struggle to understand what the use of that pattern is because of how it gets formed this time around. How it was formed. How it was formed is something you wanted to understand. So what formed it is this, but it came in the shape of this. And if you watch, you see there are different patterns. This one looks like a step market structure because the wick is usually invisible. If we turn off the wick, let me turn off the wick line and put it on a line chart. I just want to show you guys something. If we turn on the wick, this is the candlestick. We're going to go to line chart. See that pattern? You see, the pattern is a step like this. No, we have a pattern like that, but it went in a step like this one, like you were climbing a real-time stairs, and you see it's something else. However, this pattern has its usage in the market, and this one has it. This is a different pattern, and this is also a different pattern. But the wick line made it looks like. Now I'll take all this off and I'll show you the wick line. The wick line makes it look like another pattern. So you might be asking, what is the main use of this newly created pattern that has a wick line underneath it? The wick line, in my definition, represents a pattern that after moving upward, right after moving upward, and the first candle goes up, right? If the first candle goes up, because it was a weak line, that changed it from step to this pattern. If the weak line goes up, it is an uncertain pattern yet until the weak line goes down. This thing might go down up to here. If I add a trade here, my stop loss based on this monthly time frame pattern is my take profit one is going to be around where the market is going to leave its momentum at. Where the market will leave its momentum at, somewhere around this area, that point where the market is going to get to, just underneath the candlestick that you go, I think this is the best time to actually close this trade. You see, the market has already gotten to that point, that trend. That's the first stop loss. So I can close one trade here. But what I want to do is, after closing a trade, my second stop loss would be 18,000. My second take profit is $21,000, and it is only traded on this particular pattern. So I'll modify it. That's my take profit. But for the first one, I did. You see, guys, we have already gone. We're now in $4,000 profit. You can see it on the screen. This is $4K profit, and it's one of the biggest trades we've made so far. And this was the monthly confluence. But what took me into trading it was another confluence I found in the week one time frame. The market created this pattern that I'm very certain that that's the step pattern. You know, I told you something about the step. Step, when you see it twice, it represents red. It represents a downward movement. We teach these things in our VIP course. If you've not enrolled for it, please DM us. Write us on WhatsApp when you see our WhatsApp message, and message us and tell us you need those courses. We talk about it in premium courses. That's when there is a market structure that points upward or downward, and you see one in a bigger time frame and one in a smaller time frame, there is more likelihood that the market will go down, right? So the market structure momentum gave me a serious outlook for a sell position in the market. So I saw it going down and down and down again, and then I decided, I have multiple confluences on why I can sell here, right? So let me take out all of this and I'll show you one by one. This is a red candle. This is another red candle. There's two confluences. This red candle is another confluence, 3. This one is 4. This one is 5. This one is 6. Of course, I took it this month, which is 7th. So the 7th candle was my real confluence that this market was going to go down, and that was for the monthly time frame. At the week one time frame, sorry. I would check other time frames, but if only this thing goes away from the screen. Yeah, thank God it did. And the day one time frame gave me another confluence here. Let me go there right now. The day one time frame showed me a W pattern. I had something to do with in previous time frames. this particular type, this one you see here, and then the red candle one, the red candle two. That was something I also saw before taking this trade. So then I knew it was definitely going to go down, because I already have two confluences already in day one. Remember, I had 7 different confluences in week one, but in day one I have 2 different confluences. That's candlestick. So in H4 I also have another confluence that was really clear, and the H4 time frame came with even more confluences. Like the pattern, this is the pattern that was drawn. This this and you see the weak line. The weak line was something else that I had feelings for. The weak line was like this, and then it went down. And so this was the pattern. 1, 2, 3, 4. And it was a 4 hour time. The 4 hour time frame is basically meant for entries, right? So the 4 hour time frame already gave me that candlestick pattern that when it shows up you can sell with. So that was when my analysis stopped at. So from the 4 hour time frame I took this trade on this particular client's account. I took the trade on this particular pattern from this particular reason. So I'll be ending the video here and just saying, talking about clients from the beginning all the way to talking about the courses for teaching. So yes, thank you for watching this channel. See you in my next video. This is Frequency in.